Welcome back again, YouTube. This is Nick the Kid here with another investing slash retirement video. So I know I haven't made much of these videos, but I figured I'd start with this one and give you guys an update. So today is Monday evening right now. Stock market's closed. And so today is Monday, May 16th. And as of the market close today, the S&P 500 is down today about 0.40%, and the Dow is about flatline. So just either flatline means like neither positive nor negative, so it's just like slightly by a hair positive today. So if you guys haven't known, we are currently in a bear market right now. So I'm totally fine with it. I know so many people out there are getting nervous and frantic and they don't know what to do with their investments and stuff, but I'm here to tell you some of my advice. And first and foremost, I am not a financial advisor by any means. So do your own due diligence of research and figure out what is your best strategy that you want to take for your financial peace of mind in your future. And just, do as much research as you possibly can. But I'm here to at least give you some bit of advice for myself. And so I'm young, obviously, as you could see. And so I got a lot of time on my side, hopefully. And that's just it. You got to really ride out the market. There's going to be some major volatility and stuff right now. But the shocking thing, this market that we have right now that we're going through, is honestly something that we have not seen to the start of pretty much any type of market year in our generation of our lifetime that we've seen. Normally, it recuperates quite a lot quicker than this, but we're already officially now, like technically today, we're like halfway through the month of May, and stocks are still getting hammered, still getting devastated, pretty much across the board. Everybody's down. But in my individual brokerage account right now, I've been buying up some positions and stuff, a little bit here, a little bit there, and dollar cost averaging and all of that. So that's what you have to do. You stick with what you know. And for instance, I have a government TSP account. That's my 401k for my job, and I'm writing it out about probably a year and a half ago now, maybe 2 years ago, probably about a year and a half ago. I had switched up a lot of my, adjustments and stuff on my 401k. And so, if you guys aren't familiar with the TSP plan, it has five major different categories, so to speak, or different, area asset or different sections that you could invest into. So the G fund, the CSI, and then the F fund, which is the bond fund. And currently, I'm in the C and the S fund. So the C fund is the S&P 500, and the S fund is the Dow. So currently, right now, I have my holdings or my allocations as 90% C fund and 10% S fund. And like I said, I changed that adjustment probably about a good year and a half ago. So for a whole year and a half, I've been like really aggressively, adding to that position, with every single paycheck, because obviously you get paid, and every time you get paid, you get to put a certain percentage away of your paycheck. So I'm putting 13% of my paycheck away in to my 401k. I want to do a little bit more aggressively over the years, as I get more pay and stuff like that. So that's just some tips and stuff that I would advise for you guys to do too. But, in these trying times right now, the biggest thing is to find a way to continue to keep positive and motivated about the market and your future. And the only way that you can do that is to just be consistent with your contributions and just stick with your strategy that you had all along. Or at least if you think that you need to make a move, make a change. But, it all depends on your risk tolerance and the way that you feel about investing. I mean, some people just want to take it the leisure way and just go really, really conservative or whatever, or mildly conservative throughout their whole career. And, in the end game, you're really not helping yourself at all, really. So you've got to put some risk into it. But that's just my opinion. And, just budget. I mean, to really know what you would be blown away by what you could afford to put away in your 401k plans or your any of your investing strategies if you just put yourself on a budget. You put yourself on a budget, you stick to that month in and month out, year after year, even when you get raises and you make more money and blah 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 and all that. Still have that budgeting strategy in mind, because then a lot of you have so much excess left over at that point once you're done with paying off your debt and stuff. Debt, you need to wipe out as much, if not all, of your debt as possible. That is going to free up so much of your expenses and stuff that you have on your monthly expenses for your budget. So, like, for instance, right now I'm still, working on getting my student loan debt done, and then my wife and I, all we would have is our house. So, I mean, it's just a little bit goes a long way to paying off your debt. And then once you get that done, you could be a lot more flexible with, what you want to invest in, and just have a good time and not have to stress or worry about debt, not have to worry about, your retirement and stuff like that. Because if you set all that retirement stuff up, your investing strategy while you're young, it's just going to become more and more automatic to you. And it'll just be that much more of a sigh of relief to you that you've done your due diligence of your research in the past and while you were young. You made the right, smart, adjusted moves, and you stuck with it. And then in your latter years, you could be confident that you have everything in place, all your ducks in a row, so to speak, and you have emergency savings set aside, because there's going to be a lot of ups and downs in everybody's life. We don't know what's going to happen. So make the most of it. Every single day is a blessing. It's a beautiful thing. And just being able to, be uh, getting out of debt. I mean, that's just a major accomplishment in itself. But then being able to finally take that next move into investing is just going to really catapult everything else from there. So, hope all of this was helpful to you. If you enjoyed the video and you stayed this long, thank you very much for watching. Please give this video a thumbs up. Hit the subscribe button down below for future videos. I do basically now, so to speak, like 3 different categories for my YouTube channel. I'm in the process of starting a fishing channel. I want to bring fishing to my channel. I do have an inflatable kayak. I haven't gotten that out much yet. I know a lot of people have been asking me about it on my kayak video. I promise to get something out for that and start getting some fishing. So if you like that, stay tuned. I will start to think about maybe giving you guys some, like, maybe a once a month, update of like the stock market, how things are going here and there, and investment questions and stuff. Any investment questions that you may have, like I said, I'm not an expert, but I'll give you my advice. Leave them in the comments down below. Hit the subscribe button and stay focused, stay positive. The markets are insanely crazy right now, something we've never seen in almost really never. So this is a very interesting time. Make your moves, that just be smart, make your moves now, because market's going to start shifting, I think, very, very quickly and very soon. I'm positive. I'm bullish on it. I wouldn't say super bullish, but midsummer, watch out. All right. Thanks everybody for watching. Have a good time and happy investing.